Hello guys, and welcome to the 68th edition of the Trading Opportunities webinar. This is Nirav, and currently I'm just testing the microphone. Let me see if the audio is there on the live stream or what. Looks like currently it's not working. Let me start again. Looks like currently it's not working. Let me start again. Okay, so looks like the live stream is having the audio, and I know I have not been able to post the update of the coming webinar. I just posted like 2 minutes ago, so I'm not hoping for a audience or big audience this time, but in case you do swing by, don't forget to say hi in the chat. So with that being said, let's quickly get started. First of all, with the legal disclaimer here on screen suggesting that all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading investing, you yourselves will be liable for your profit, your loss, or loss of profit. Right, with that out of the way, let me just give you a very quick introduction before we run into the main part of the webinar. So as you guys know, my name is Nirav and I'm the admin and owner of 50years.com website, as well as the YouTube channel 50 Years Market Analysis, where I have been presenting these trading opportunities webinars since quite some time. Currently, we are in the 68th edition of this webinar series. And in the past 66 webinars, we have captured 87 plus big moves, right? And we will see what happened with the analysis of the 67th webinar today. So that's about it for the webinar. Currently, we are conducting them at 2 p.m. GMT, so and 7:30 p.m. IST, and you can just convert it to your time zone wherever you are in the world, right? So that is the timing we are conducting these webinars currently. Lastly, before we proceed with the actual webinar, I'll just like to show off the accuracy that I've had for all these years. Since 2016, I have been keeping a track record of all the webinars and videos that I publish. And as you can see, the accuracy remains above 80. It's 2016 is 83.34, 2017 is 87.50, and 2018 is 84.61, so on and so forth. Let's check 2019, 84.88, 2020, 88.52, and 2021, 82.22. Right, so I'm just showing it off because it is above industry standards, and I have personally not seen a track record of this level of accuracy consistently for these many years. So with the introduction out of the way, let me just give you a quick rundown of how this webinar will proceed. First of all, we will discuss Euro USD, followed by crude, gold, S&P, and then Nifty, followed by Bitcoin. And yes, we will be starting the private group this weekend. In case you have missed the details of how to get started in it, you can just request the same by going to the website and the contact us page and sending me an inquiry with the subject line private group access, and I'll send you the details and everything. With that out of the way, let's now get started. I'll talk a little bit more about the private group and what's involved in it a little bit later, and also the future of these public trading opportunities webinar as well. But for now, let's just get started with our actual webinar. Hello, Sandeepan Mitra. Hope you are doing fine. And what about the other guys who are in chat? Do make sure to say hi. With that out of the way, let's now get started with the actual chart discussion. First of all, we have on screen the chart of Euro USD, and we already know that on this chart, our bias was that if the market goes above 1.0796, then we will be interested in longs. Otherwise, we were interested in waiting for this market to go sideways and then take short trades if it went below 1.06800 and lower downside levels. right? So we already knew that 1.0796, or let's just say 1.079, was the level above which we'll be interested in longs. And what is the count now? Let's just quickly check that as well before we discuss further strategies for this thing. Let me just. So as I was saying, last time we have already discussed the upside, but there are basically two main scenarios which might be playing out on Euro USD here. The first one, which I think is the possibility that this market is heading straight for an upward movement, like a flat correction is complete and it will just go up. That's just, let's say, one of the two possibilities. Let's just say hypothesis number two, right? Straight upward movement. And the hypothesis number one, which I think may be playing out, is that this market will continue going sideways for a bit within this price range, and possibly this is a triangle under progression, and in which case the market will still go up, but after a little bit of a pullback, minor pullback, and then up, right? So still we are expecting upward movement. So basically, long story short, swing perspective, we are currently thinking that this market is pegged for much higher levels. Obviously, the simpler strategy is to just add longs near, not near, above this zone, which is 1.1088, right? And if I do see a pullback with three-way structure, basically a possible zigzag structure in play, then again I'll be looking to add what do you call longs on this counter, right? So both ways we are looking for longs, and the best case scenario in this particular chart would be that if the market progresses down for this three-way structure, then that will be the best case scenario for us, because it will allow us to take positions with the smaller risk. Basically, the risk will be somewhere lower than little bit above wave C low. Actually, we do not have to go at the exact low in this case. So somewhere around, we can say 1.066 would be the level where we'll be taking a stop loss for the pullback. So that's our strategy here. Wait for possible pullback to enter longs, or wait for the market to take out the range high, which is 1.109, roughly speaking. I do not think there is much to add here. In case you guys have any doubts or questions, you can just put it in the comment section. Otherwise, let's just head over to the next chart of CL. And by the way, if you are in the chat and you don't have any doubts, you can just type in clear. So CL is the one which did not really move as per expectation. So last time when we were discussing this count, the view was that this market. Hello, Fraser. Nice to see you here, and thank you for the confirmation. So last time, and thank you, Sandeepan, as well. Last time when we were discussing crude oil, the view was that we were thinking that this was the wave below, right? And we were also thinking that this possibly was the wave two, and this market will go up for at least one leg. Now, what has happened is the complete opposite. If the market had gone a little bit lower than this level, it would not have been an issue. But the market has just continued to go lower, and it has gone lower than the subsequent expected wave two low. Sorry, wave one low. So in which case I had to update the counts, and currently what I am thinking is that perhaps this wave B has become complex. If a wave B becomes complex, then that basically means that it can go sideways within this range a lot. Currently, I'm thinking maybe this is the first leg. The B leg might be continuing, which will be then followed by a C leg, or it is also possible that the B leg is already complete here, and then this is the C leg over here. which I kind of doubt here. I think that this is just continuing inside a complex correction, and maybe the wave B is also even continuing, right? So basically, long story short, is it is a kind of market that I would like to kind of ignore at this point in time because it is not really going very or moving very clearly. But yes, the upside bias still remains, and for not missing out any possible strong bullish or strong up move, what I've done is I've kept the upside alert still at 72.80. So unless the market forms something of a clear pattern, or if it just blows through this last high with a strong green candle, we are not going to take any action here. It's a wait and watch market. We do have a bias of the direction, but nothing much to add here. It's basically I'll just put it in the lower part of the watch list. Right. So with that being said, let's now head over to the next chart and gold. And do let me know, guys, if you have questions, or if not, just type in clear. Sandeepan has asked that previous chart I was using 4H and now 1H. Any particular reason behind it? No real reason behind it. I do generally shift to 4 hour and 1 hour time frames very frequently. 4 hour is a time frame generally you will use for continuous kind of markets like crude oil and currencies, and indexes like S&P, which also have overnight sessions, right? And I just switch to 1H whenever I need to see a little bit more detail on the chart. Thank you, Fraser, for the confirmation. Let's now head over quickly to gold chart. So gold, what we are seeing over here is a little bit of, let me just quickly clear it, a little bit out of the ordinary kind of movement, I would say. And the reason is that this wave 4, which you are seeing here, the wave 4 or dot wave 4 after this dot 3, it is consuming too much time and is having a lot of strong movements inside of it. I personally was thinking that, by the way, I am holding short positions on gold, and currently they are not running in profits, right? But I am going to hold on to this short as long as the market stays below 1971. Actually, my stop loss is a little bit higher than 1971. I placed an alert here just to see if the market goes there, with what speed and count it is going there, and in case I need to adjust the position or just let it hit the stop loss. Right. So what I'm basically trying to say here is that our expectation was that when this market was heading lower, this leg should or was expected to go till 1920 and even 1910 levels. But what we see here is that it has reversed from 1924 levels. So basically, theoretically, it should have just gone lower than this low. It is at 1933 level, 32, 33 something, right? So practically it has done that, but my personal bias was that it will go to a little bit more like 1920 levels, which I had marked, and you can also see the alerts, and perhaps I did discuss it in the last webinar. So based on that analysis, I kept on holding the position, and I was not expecting, I was okay with the pullback, but not expecting this sharp move. So perhaps it is possible that I am wrong. That's why I am saying that my stops are placed above 1972. So let's see how this goes. And in case I'm correct, then this is a wave 4, then nothing to add. It should go lower. And if it goes lower, then it will go lower than 1930, 1924. So it will go to 1920. And our next immediate target is 1912, roughly speaking. So that basically means my targets will be hit, right? If not, I have already told you the stop loss. And the counts are actually the same as we discussed in the last webinar. I have not really changed much of anything, but this movement does seem to be suggesting that I might need to change something on this count side, because they do not really seem to be fitting very well with the current market movement. This wave 4 looks very off compared to the entire structure. So that possibility remains, but even with that being considered, the trading strategy remains the same. So yes, that's it for S&P. There is no question or nothing to be added from my end, right? You're welcome, Sandeep. Well, I have heard the name Sandeep. What is the meaning of Sandeepan? Yes, guys. One thing I wanted to announce here before moving forward is that from this weekend onwards, I will be running a private group for people who have already, actually, a lot of people have already registered for it. So, in case you missed it in the last webinar or you were not in the last webinar and wanted to get the details for it, I'll just quickly let you know that you can head over to the website, and in the top corner you will find the contact us page. You can just type in the subject matter as details for the private group, right? And the current idea is that we will be conducting two private webinars in this group at least, right? One on Sunday and one on follow-up webinar on Wednesday, right? I'm currently not decided on the time, but of course we'll discuss it with the members and find the most optimum time for everybody. So long story short, if you are interested in getting more of these webinars and you are finding value currently, then you can what do you call request details for it. And yes, one more thing, the webinars will also be followed by group private posts of setups and analysis that we discussed in the webinar. So it basically will be a sort of continuous coverage. So something for serious traders to consider. Okay. So that's about it. Let's now head over to, well, I think I just discussed that. Okay. So in that case, let's now head over to our next chart of S&P 500. I'll just quickly move the alert here. So S&P is actually moving precisely as we discussed in the last webinar and has gone ahead and touched our minimum upside target. So first of all, when we discussed in the last webinar, S&P was at, let me just quickly check what the price level was on 9th of June. Here it is. So on the 9th of June, when we were discussing S&P, the market was somewhere here, roughly speaking, right? And after that, the basically the bias was that minimum upside target or the smallest upside target was this white line, right, of the white box or the upper line of the white box. Basically, the price level of 4374. And I also did discuss very clearly that it was kind of a make and break level for S&P because it was also at the wave is high or what we expect to be the wave A high, right? So it has already broken that and it has gone above it. So it has done the bare minimum, right? So the bare minimum was that it will go to 9374 and maybe a little bit higher. That will conclude the fact that this market has done at least, one second. Yes. So that basically concludes the fact that this market has done at least a minimum three waves in the upward direction in case this market is corrective, right? So in case the market is corrective, it has done the minimum A up, B down, and C up. It can be taken here as well or here as well. But I'm not going to go into that because we are just talking about the minimum requirement. So it has done that already. So what it brings to us is the fact that if this was a corrective move up, then it is already complete, right? If the corrective move up is already complete, then a downward movement can be expected. But on the other hand, the second count is suggesting that this market might be a wave A down, B up, and C down. That's the bearish count, right? And the second count is that the B was here and the C was here, and it is already complete. If the complete count is done over here, then we expect that this market can just fly high from here, right? It can go much, much, much higher. So basically, a long story short is if you are holding longs, then in this case scenario, it is wiser to just trail the positions, right? Because if this is the low here, then the upside basically can be substantial, right? It can go break the last high and keep making new lifetime highs over and over again. We don't really know, right? So from a long term perspective, or what do you call, for someone who holds two positions for weeks and so on, this thing can just go higher, right? There is no second doubt about it. Only bearish scenario which we have in mind, we do not have any evidence for it right now. So bearish scenario we just keep as our secondary hypothesis. We are not going to discuss it in detail because we do not have any evidence for it. Right. With that being said, let me just quickly see if there is something more to add on the shorter time frame. On the shorter time frame, it does look like this market is currently in a 1-2 progression. I think this wave 3 is still having some upside remaining, and as soon as that is complete, we will see small pullback, which will again be followed by more upside. So basically, yes, I think more upside is remaining on this counter. Short term wise also, more upside should be seen. So based on that, I will be looking to add longs in the coming session, or if we see a clear pullback, maybe in this session as well. Who knows? So that's about it for our discussion on S&P. And if you guys were following me in the past webinars, you would have been able to capture this move, right? Let me know if you guys have any questions or doubts. If not, just type in clear or understood, and we'll move over to our next chart, which will be Nifty, which will be followed by BTC. Hello, and thank you, Fraser, for the confirmation. Now let's head over to our last two charts. So a little bit of so there's a question here. Intermediate wave 4, are you taking? No, there is nothing like that with the time frames, Sandeepan. I am not using Forex for in that sense. I just shift between time frames depending on how much clarity I want to see on charts. So if I want to see them in a little bit more detail, I just switch to a lower time frame. If I don't want, I switch to higher. You are just assuming things which are not necessarily correct. Right. So with that being said, let's now head over to our next chart, which is of Nifty 50. And I have updated a little bit. I did suggest this possibility in the last webinar as well. The possibility which we have updated here is, let me just quickly show. And yeah, I did capture one more trade in this week, which was on BTC. So we'll discuss that next. So stay tuned if you want to check the trade. So the update is that previously I was saying that perhaps this was a 3 of a lower degree, and that would make the Roman 3 come over here. So I have already made that adjustment on the actual count chart. Previously it was just a lower probability scenario. Right. Second thing that I have updated is that I'm assuming that perhaps it is a diagonal in play, or let's just type it in expanding ending diagonal in play. Right. What the hell is that? So if this is an ending diagonal in play, then we are expecting the market to go lower, at least take out this white trend line, right? However, at the same time, we do not want to forget that S&P may be suggesting extreme bullishness, and when S&P is suggesting extreme bullishness, generally the other indices do follow it, because Nifty is in some way related to S&P with the certain degree of correlation. right? So with that being said, although I'm thinking a diagonal might be forming here, I'm not going to go and take outright shorts. I will wait for some sort of sharp drop, or at least the confirmation will be the move below this white trend line, right? So either there is a sharp drop or a move below this white trend line, that would suggest that I will be looking for possible short term selling opportunities. And the targets I'm thinking this market might take are 18,590, let's say, and 18,415 in the more bearish scenario, right? So that is the quick look on Nifty. Until we get a confirmation, we are not going to go shorts. And at the same time, if this count is relegated, I'll be very much happy to enter longs. And by relegated, I basically mean that we need to see something very sharp which should take out the upside move, right? Basically, it should go higher than this white trend line and stay above it on a time frame. Let's say we are on 1H, so 1H works. So if it stays above it on the 1H time frame, then yes, I'll be considering long opportunities, and at that point, I'll relegate this diagonal count completely. On the upside, it is, I think, at lifetime highs. Let's just check that. Yes, it is near lifetime highs. So on the upside, there is not much point in discussing targets. If it takes out the upside, then who knows where it will stop, right? So yes, nothing to add here on in that regard. So let me know, guys, if you have any doubts, questions. Otherwise, just type in clear and we'll move over to the next chart of Bitcoin. Well, targets are generally retracement levels of Fibonacci ratios. Currently, we are looking for wave 4. So Fibonacci ratios for wave 423.6 is what I have been using. Let's now head over to our next chart, and thank you, Fraser, for the confirmation there. Bitcoin. So let's just quickly discuss what the trade was that I conducted. Thank you, Sandeepan. There it is. Yep. So if you guys recall Bitcoin, I was suggesting in the last webinar as well that I am more interested in looking for a possible sell setup on this counter. What happened was that this, let me just zoom in. This part was looking very corrective to me. It was basically corrective structures are choppy, sideways, and overlapping patterns. And if something says choppy, sideways, and overlapping, it is this this part, right? So it was very corrective, and I decided to go in with small positions somewhere within this range. Let me just draw some random lines. Somewhere within this range, I entered minor long positions, sorry, minor short positions. And as it kept going higher, I added minor shorts. And after it gave this spike and one or two red candles later, I added more shorts here. Now, by this time, I had heavy shorts, left the position as is. And when it broke the low, after that, because I had an alert placed somewhere below the low, so somewhere here within this candle, I exited because the targets were also placed there. I think I might be able to check the target levels or the entry and exit, so that will give this discussion a little bit more sense. So let me check that. So yes, my entries were shorts entered around 25806, 891, and so on and so forth. Let me just type in one number in the middle. 896,876. Yes, so within this range, I entered the shorts, and the exit is at the major position was exited at 25058. So let's see that now on the chart. 896, where is that? Yeah, so somewhere here, entry 25058. Yes, there it is. Somewhere here, roughly speaking, was the exit. So I was able to build a position within this sideways choppy movement and then exit after the first leg down. Now, interestingly, what happened after this leg down was that it did go to our minimum expected target 24773, exactly reversed from there, right? I did not wait for the target. I generally do like to take out the major positions before the targets, right? That's just something I've learned over the years. But it is interesting how it reversed exactly from it, right? So that is what happened. And again, if you were following me in the last webinar, you should have been able to capture this opportunity, right? As a matter of fact, if you were able to capture it or did see me discuss it live, which we can still see by going to the recordings part on the YouTube channel, do let me know in the comments for the other audience to see, right? So that is history. Now let's now discuss what I think is happening on this counter. Yes, one more thing, guys. In case you want to see more of my own trades being discussed in much more detail with proper exits and entries and detailed studies of why I entered, where I entered, then do note that such kind of discussions will be done in the private group, which I have already told you about a little bit earlier in this webinar. In case you forgot it or was not a part of it at that point in time, then you can post your inquiries by going to 50s.com/contact us. We will be starting the group from this weekend, basically this Sunday, right? What's involved and all other details you can request by going to 50s.com/contact dash us. Okay, now heading over back to our analysis and where is that? Yeah. So what I'm saying is that situation here on Bitcoin is I'm currently still thinking that maybe more downside is remaining because still it has not gone ahead and touched the 23,945 level, right? This lower part of the white box. We were expecting that this market will go and penetrate this white target zone, which it has done. So, well, that's good for us, and I was able to take the trades as well. But I will have been more satisfied with the correction being complete if it had gone and touched this level, right? So what is happening right now is a little bit unclear situation here, and I personally think that we may be seeing a little bit more complex count. Perhaps this is a W and this is an X, which is being followed by a wave Y in the downward direction. Let me see one thing very quickly. No, that's not possible. I mean, there are multiple possibilities at this point. Maybe this is a Y. Maybe this is heading up for an X, and then it will be again followed by a Z, which will touch our target level, right? And the second possibility is that maybe the Y is complete over here. It will now head up. And there is another third possibility which I am seeing, which is even more complex. So I will avoid discussing it. But I'll just tell you what my primary bias is. My primary bias is I will be tracking this market to do something like this, something of A, B, C correction to the upside, right? Because I think that the downside target may still be achieved. So if this market does something like this, a zigzag kind of movement in the upward direction, and then confirms the downward movement, let's say crosses the wave B of the zigzag, then I'll be looking for what do you call possible sell opportunities on this counter. Right. So that's just my bias. But as I said, too many possibilities are appearing right now, and I don't really know which one to follow. So Bitcoin is a wait and watch, but definitely to keep something on the top of the watch list. Okay. With that being said, I think we have come to the end of this webinar, right? And as I have already said, that I have started a private group. If you are interested, you can check the details, and I'll see what will be the future of these trading opportunities webinars. I would love to do more of these, but with the private webinars in play, let's see how things go, right? If you guys have any question on the last chart of BTC, kindly do let me know in the comment section. Otherwise, we'll call it the end of the webinar. So there's a question. Let me see. You're welcome, Fraser. So the question is, from a shorter perspective, is there some pullback level to expect? Pullback level to expect even if bullish. Pullback level to expect even if bearish, I think you are saying, right? So in case I'm not sure what you precisely mean, I'm assuming you are saying that if this is going to be an X and Z, then where will be the X stop? If that is your question, then we are already seeing extreme amount of resistance, right? So my personal view will be that somewhere around 26,420 something level to 26,820 something level is where I should place the resistance here. The thing is that whole of this part is just resistance. Can stop anywhere within this region. That's why I did not specify any specific level. If there was something else you were asking, do let me know again. Okay, guys, so there's nothing to add here. With that, let's now end this webinar. Thank you for joining in, and do not forget to like and share this webinar with your friends and colleagues. I'll see you in the next one.